Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them to your Tradier brokerage account. Today on the show, we're going to discuss trading reverse iron condors around earnings, including how to set up a backtest and an option scan. Matt, do you want to share a screen and get us started by going over our double calendar trade from last week?
Absolutely. All right. So if you recall, we did our election trade, and we thought that XLE had come down the most in what it was implying around earnings. So I think it was implying about 3.5% a month ago, and then it was down to about, I don't know, maybe under 2. So we thought, let's get some juice, let's get some options in XLE. But instead of just buying them outright, let's do it because it's pretty expensive. Let's do a calendar and 2 calendars. And then, so what we'd be left with after Friday's expiration, which was the first, was just a long strangle. So like a double calendar is a young strangle with an older strangle, or said in a different way. We are long on the 8th, which is the Friday. After the election. The election's tomorrow day, and so we're short the Friday, November 1st. So we wanted those to expire worthless, so it would effectively lower our cost of the strangle that we had. So, for example, we had it's 28 cents. And 48 cents. So what is that? 76 cents that we sold, and XLE expired between those. So we had those expire worthless. 76 cents. So let's take a look at where those other legs are now. So if you look at actually, let me save this. This is going to be what we're going to talk about today. This is a reverse iron condor. So I was working on that a little bit. So let's go to our paper trading. Let's go down to XLE and know that we paid $1.91. Let's see if that jives. Oh yeah, $1.90. Well, yeah, this was just today. So we paid $1.91, or then did we pay $1.91, Tyler? This says $1.15.
Yeah, I think that was you took that screenshot. Today. Yeah.
No, I took that. I think I took this. Yeah, right after we traded it. So I think we paid $1.15. For the calendars, and today it is worth $1.42. Now it says $1.91 here, but that doesn't count for the 76 cents that expired our way. So we're doing pretty good so far, and we're gonna hang on to this for a while. I'll probably set an alert. Yeah, let's try to get $1.91. So we'll just set an alert. That's one way to do it. Or I could add an alert, trade alert. So if I get even 10%, so it's going to do 10% on the $1.91. So if I make a little bit on that, so this paper, the T-Hub, you can put your notes in, which is nice, and I get a text if this happens anytime this week. So hopefully we'll sell it for $2 and make a bunch of money on this trade. All right, Tyler?
All right. Yeah, looking forward to seeing how that long strangle holds up.
Yeah.
So this week we're going to talk about reverse iron condors around earnings. Matt's done several back tests that he's going to show you. and the legacy backtester where you can set earnings entry and exit date triggers, which is really neat. And we're also going to show you how to set that up in the option scanner so that you can make trades with a custom reverse iron condor strategy, which is one of the really cool things you can do in the option scanner, set up custom strategies. So why don't you get us started, Matt, with the backtest?
Yeah, so here in the result of the backtest, you can look at how I set this up. So I wanted it about a week anywhere, but I wanted to make it pretty wide just so it would find some type of a trade. And so basically 7 days to the DTEs, days to expiration 7, minimum 2, maximum 33. And you see that we have a short call and a long call. Usually the way Iron Condor is the long call is first, and that's the out of the money. So you're usually an Iron Condor is selling a call spread and a put spread, but this is buying both. So we're going to be buying both, and then we're going to be entering before earnings, between 1 and 4 days before earnings, and we're going to be exiting. Actually, this exit is just at expiration, so we're just going to let it go to expiration. And then the strike width, of course, has to be greater than 0, and so that's all set. So that's how I set up the trade. You might notice this symbols on the download, so I could look at the download. So these are the symbols that I put in, and I wanted to do it for the last 10 years, and I wanted to just take the biggest stocks in terms of volume and just see how this strategy did. And so basically,
you're running a backtest on all these symbols at the same time,
right?
Okay,
exactly. So then if you look at it, then it starts saying, here are all the Apple trades, and then you scroll down. There's a ton of trade. There are a ton of trades. There, NVIDIA, Intel, Amazon. So it just puts all the trades in here, and it weights them. So let's just go up a little bit to the header. There it is. So then there's a weighting. So so we have, what do we have, like 12? So it was a little less than 10% each on the weighting, and then it would put this strategy on. So it's selling the 123 8 days out for on the first earnings for Apple in 2015, and then it got out when the expiration date was. In this case, it lost money. So you got in when the stock was 112, it went up to 117. So we had a 117 long call, and it just ended in the money, $16. So you lost money on the ones you're long, you made a little bit on the ones you're short, and that's how the reversed Iron Condor works. So far, so good, Tyler.
Yeah. Did you explain the entry triggers with the earnings date?
Yeah. So just touched on them briefly, but and I could show you how to set it up. But the entry triggers were earnings before. I like to do 1 day. Give yourself a little bit of a range so you get in with all the deltas. It just gives it more days. If it doesn't find it the 4 days, then it will look at 3 days, 2 days, 1 day. So it's going to be almost guaranteed to get in if they have some options around there. And then
we get a lot of questions about that sometimes, like why is the backtester not entering the trade, or why is my option scan not getting any results? And oftentimes it has to do with the strike deltas or days being too restrictive. So our option scanner is going to look at the whole chain, and it's going to find the one that closest matches your criteria. But if your criteria is too restrictive, then it's just going to show no results. And so that's why Matt gave a few days of buffer before the earnings date, just in case it didn't find any results that first day. It would try again the next day, because your deltas here are pretty restrictive.
Well put. So I'm just going back. This is my Excel-based client where I could go look at actual options data. I could have done this in the API console as well. So you could tell that there aren't that many expirations. So there's the 23rd, 30th. I guess it goes every week. So you just have to make sure that, and in Apple, I mean, obviously it's got a lot of different strikes, but you have to make sure that the delta, matches what your iron condor is. Apple's not that big of a deal. But if you have a smaller less liquid stocks, then you're going to run into some issues sometimes with it not finding trades to do, and you don't want to be in that predicament because that could be the big move on that earnings. So you want to make sure you make your settings wide enough. Like that's why it's so wide in the days here, and in the deltas that it'll pick up options most definitely. So the cool thing about the backtester is, we don't have all these different types of strategies all in here, but we give you the ability to set them up. So whereas there's no reverse iron condor, there's a regular iron condor, and the way you set it up is you change the signs from this was +1, it went to -1. This was -1, it went to +1. So you could set up the reverse iron condor in the ratios here. You could also do 1x2s. You could do, it's very cool. So you could do many different kinds of studies, ratios there. Of course, for this one, we wanted to show the reverse iron condor because it's somewhat understandable, not too technical, but you could also do diagonals where you would then change the DTE relationships, and I'll show you where that is. So then you have to make sure your leg relationships match as well. How the DTE diff on this one in an iron condor or a reverse iron condor, you want to have the same expirations. If you did a calendar trade, those would be different because you'd want to trade different expirations. But in this one, they're the same. In this one, the strike width, you would set this up. It's leg 1 strike minus leg 2 strike, and then so that's a minimum and maximum. So you set up the strike widths, and then so those are already all set up for you, and you just change the ratios, and then you go into the entry date triggers, and you set up earnings. This is where you set up earnings before. So earnings before, 1 day before, 1 day after, and set that, and then you go into the exits and you want to exit. Well, in this case, we didn't exit, but if you did want to exit, for example, you would say the earnings is the exit trigger that I want. Do I want to get out before? No, I want to get out after earnings. How many days after 1? And then so you would get out 1 day after in that instance if you wanted to. Of course, in this one, I just let it go to expiration, and then I paste it in. And you could type in or paste in your symbols. If you have a symbol list, it's kind of nice. That's one in, and this was my earn date BT. So that was my earn date file that had all these files in there. So it gives you a lot of control. So this is just kind of a straightforward test. This is not really what I usually look for, because we're not like in this case, we're not really looking for any valuation. So generally, if I did this on my own, I would try to set this up where there was some edge, where there were some entry indicator triggers, where like the forecast was below the implied. You could do a lot of things in the triggers here that we'll talk about in just a second. But this is just a good basic back test to see, just in general, if you would have just blindly traded reverse iron condors on these symbols, how it would have done. And I think in this case it was pretty marginal actually. So is this the one? I have these notes here. I should have. Oh no, here's the reverse. Oh, that was just a reverse iron condor for Qualcomm, just to study it, and then so I think this is the one. So anyway, in the back test, you know, it didn't end up that well here, but you know, this is just, like I said, a general back test. And if we were truly training this, we'd spend a lot of time and do a lot more back testing on this. But I'd like to show you what I would back test and find a strategy just to start eyeballing these right now. That makes probably more logical sense, meaning not just buying blindly a reverse iron condor, but buying a reverse iron condor on stocks that we've sorted by the implied over actual. That's more in our favor. So, for example, what we're looking for in this case are stocks that, like NXPI, where they have earnings coming up, which is after the close today, and where the earnings implied is could be less than the average actuals. Actually, this is the other way, right? So this is the average actual is pretty low on NXPI. So did I look at the scan backwards? So this is the implied earnings move. Oh yeah. So this is where the implied is over actual. We want to do this ascendingly. So actually,
Yeah.
I have another.
That other stock would be a great example for a regular iron condor.
Right. So whereas Expedia Group, sorry, I got turned around there. Expedia it usually averages 10.9, and now it's 8.9.
Well, so, you can see the clear difference. And actually, if you could pull up separate tabs, Matt, one with Expedia, one with the other one, you can see in the visuals. What was the name of the other stock?
NXPI.
NXPI. Yeah, so if you just look at the graph there, the implied versus actual earn move, they're pretty much all inside. The actual earn move is inside the range.
Yeah, except for the last one, of course.
The last 12 times. Yeah. But then if you go over to Expedia, it's the exact opposite. And so I think the graphs are a really neat way of
you can see very quickly that Expedia often finishes outside. So maybe we'll do two. We'll do one with Expedia, or actually, well, let's use the option scanner. I like to use the option scanner in order to find these trades, Tyler.
Yeah, great tool, very customizable.
Yeah, reverse. I see where. What are we looking for? We're looking for. So there's a DTE difference here. We don't want that DTE difference. Oh, I don't have any stock. Oh yeah, I do have stocks. So NXPI. Why isn't this finding stocks? Okay, days to expiration, calls. Oh, some of these are assumed to be zero if there's nothing there. So DTE difference. These are that is fine that they're zero. So leg one, it's leg two. So I'm just going to put in.
Do you have any table filters set?
I don't think so. I think it's finding some now. So here we go. So is this a reverse iron condor? So we're buying that put, selling that, buying that, selling. Okay, good. So it likes take two. It wants to oh, okay. So I need
payoff diagram will tell us a good story there. So that looks like a regular iron.
This is a regular iron condor. So I need to set these. Yeah. So I need to set it where let's see, the long call one, that should be negative, right? So it should be, yeah. So the long call should be minus the second one. That has to be negative. So -2. Let's see if that finds it. We shouldn't be getting a.
Oh, that might be right.
But we shouldn't be getting a credit unless it's really wide, which it's not. So
there's it's the last leg there. That's
well, we're buying this 175, selling that. That's right. We're buying. Oh, it's the put is wrong.
I think that leg 3 and 4 strike width has to be +2 to +20.
Okay. Oh, I think you're right. Okay, now we're paying. Okay, there it is. So that's what it looks like, more like a I don't know, straddle or something. So this is ALB, and so let's look what we're sorting on. So let's move the forecast edge up. First, what we want to do is do our normal thing where we don't get too much edge, because you'll start to get those crazy ones. And so now we're finding the more of the best ones, and then yeah. So let's take a look at this one. Looks a little expensive, especially, yeah. So this is just buying a put. So that's a little bit. So we should probably. I bet you that delta is pretty off. Yeah, so that's an 18 delta. So we want a delta between like 5.05 and 0.05. So now we're not going to have anything kind of that great of a looking. Now that looks like, because we definitely, in this case, we want this stock to go down. So this is probably negative. So that's a -4. So maybe that's even too much. So then I would say, let's lower this even more to 2. Let's just see what that looks like. And now we have AMAT, and that looks more like what we want, right?
Yeah.
That looks, to me, that looks a little tight. I'd rather have a wider one. So in our case, some of these moves, so this move only needs to go to, 176. So that's only down 6. So that's probably not enough for AMAT. Let's just look at what the average earnings move in AMAT is about 3%. I wonder why this one came up.
Well, the interesting thing here, I look at how big that earnings move is, the implied compared to the ones before. So the market's expecting a pretty large move.
Yeah, but why did this one come up? Why did it AMAT? So AMAT is sending. Save my scans.
It was less than 1. It's at the top.
Oh, you're right. We should probably set this. Oh, okay. So there's just a lot that are meeting there. So let's do this. Let's set the implied earnings move divided by the absolute to be like under 1.15. So we'll only have a few of them here. Yeah. Okay. So now we have 16 stocks. Saved my scans. Okay. Now let's go back. And I think I need to reload this. All right, let's take a look at this one. S works. Let's see how that one looks. See, I think this is a little bit too tight for me. Okay, this one looks good. Or no, still SWK.
Well, that one is skewed by I see what happened there. That had two very large actual moves, one up and one down, that skewed the average. So that would be a big payoff. That one's probably more like you would do like a long straddle on. We want something that's exceeded the implied move 80% or 90% of the last 12 earnings moves, right?
So yeah, we want we want something that moves around a bit. So let's go to the option scanner. So we're not oh, it's still in descending. There we go. These are the lists that we wanted. I just didn't have it in there right. All right. So Moderna's one. That looks a little funky. That looks like you still looks okay. Oh, you know what I wanted to do, Tyler? I wanted to spread out I want to move the deltas down a bit. I love how you can just do this so quickly.
Yeah, and if you wanted to make that Condor more balanced, you would adjust the strike widths down below.
Right, but that's hard to do because there's some high.
Right.
I guess you could do it with deltas, but like I like to do it with deltas, so I think they're all right. Let's now look. This should be more. So this is more out of the money. This is more what I want. And how's that delta? Delta's not bad. So that looks okay. I'm not in love with Moderna. I often will take out some of these biotech or whatever. So let's look at MPC here. That looks pretty balanced. Let's go look at the earnings and news for MPC. We want to see some outside, which we do.
There's a few that are right on the edge too, which is
good. And 4.7 versus. So that's pretty close. I wouldn't be averse to this one, Tyler.
Yeah, we can try it.
80 cents. You only make 2 cents there. Yeah, let's move on. I don't like that one as much. The reason I don't like that one as much is you don't make that much. And so let's take Moderna, MPC out. And it wasn't that much edge in the, so here's 90 cents. So you still could make a bit there. Let's take a look at the earnings implied move.
That one looks pretty good.
This one looks better. So I'm down.
We can look at the trade builder too, see visually kind of where those strikes.
Trade builder or trade history?
I mean, we could do both.
Trade builder. Oh, I see what you're saying.
Yeah.
Yeah. So like you're saying, where does this fall versus
like where's it going to have to go? And you could pull up the implied range too. And clicking at the top, you can, instead of the if you click on those buttons, you can see the range there.
Isn't the value vol pretty close to the one? Yeah, it's so I like it. This is pretty close, I think, right?
Yeah, that's close.
So, and you can see the valuation. So this one looks pretty good. I'd give it a shot to get there.
Yeah, I like it.
All right, so let's try this one out. Theoreticals, 98 cents. We're going to pay $1.15. So I don't think we have to pay more than that. All right, so we'll force that and send that off. Always wants that to be just equal. For paper trading, for some reason it wants the theoretical value to, when it rounds it, to be exactly right. And now that trade isn't here anymore.
Oh no.
Yeah.
Well, we can just narrow down by the symbol.
Well, let's take a look. Maybe it was fortuitous. So this is DD now. This one looks pretty good. All right, let's see if we can get this one to trade. If we force it, it has to equal 93. Yeah, that's right. All right. So let me take a picture of DuPont, and we're on our way, Tyler.
Awesome.
All right. All right. So when does DuPont come out? Tomorrow morning. So we'll be able to see.
Expires next Friday.
Yeah, but we'll see how it does tomorrow. Okay. And I could set an alert. I like to set these alerts. So the day I'll set this as a time or in event alert. So I want it one day after earnings. And so that's paper. I always put my broker and then why I did it, T-Hub. Oh, look at that. I could put that. That's a good idea. All right. I think we're good, Tyler.
Awesome. Thank you, Matt.
Yeah.
If you guys have any questions about anything that we just did in the dashboard with the backtester or the scanner, you can always leave a comment below the video or email us at support@orats.com. We also have a community tab where you can share your ideas and share your scans. And we post a lot of scans in there as well for you guys to use. Thank you, Tradier, for hosting us again. And thank you, Matt, for demonstrating. We'll see you guys again next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.